The best way for traders to make money these days is to leverage the power of prop firms. But here's the thing, most traders are gamblers, they lose money. And so in this video, I am going to show you my blueprint step by step of how I'm going to get funded $1 million by the end of 2025. If you're new to the channel, subscribe. Let's jump into it. So this is the overview of what we will cover in this video. Number one is win rate plus risk to reward ratio. This is the most important thing that I believe every trader should understand. Number two is now the strategy where we shall apply the win rate and the risk to reward ratio. And then from there we have the risk management, accountability, and the daily report card. So I'm sure if you follow this simple process, you will get funded too easily. All right. So number one is win rate plus risk to reward ratio. So here's the thing. Most traders want to make money but don't understand how they are going to make that money. And there are two terms that get thrown around, but people don't understand what they mean. So win rate means that how many times in a given period are you going to get paid? So in a, say, 10 trade period, how many trades do you win? How many trades do you lose? And with this strategy, I'm aiming for a 40% win rate. Nothing serious, nothing much. Out of every 10 trades, I just want to win 4 of them. And then with a risk to reward ratio means how much you're getting paid. So win rate is how many times you're getting paid, and risk to reward ratio is how much are you getting paid after each winner. So risk to reward ratio for me, the list that I am looking to get is 1:3. Just simple, nothing complicated. So once you have your win rate and you have your risk to reward ratio, then now you can simulate a possible trading period. For example, let me show you a period where we start. So let's just start with the period. So we have day 1, day 2, day 3, day 4, day 5, day 6, day 7, day 8, day 9, and then day 10. And then in this trading period, we have day 1, we start with a loser. And then day 2, we continue with our losing streak. Day 3, we continue with our losing streak. Day 4, we win. So that is a plus 3R. Day 5, we continue with losing. Day 6, we win. Day 7, we win. Day 8, we lose. And then day 9, we lose. And then day 10, we win. So total winners is 12R and total loss will be 1, 2, 3, 4, 5, 6. So you will have made 6% easy. Now, this is where a lot of traders get really frustrated, because this game, this simple illustration, gives you scenarios that you could expect in the market. For example, you might have 4 losers in a row, even 5, and then you have the winners come later on in the period, which means that if you leave before trading on day 6, day 7, day 8, and day 10, you will never get the opportunity to make back your money. So this is where if you panic once you see the losses coming in a row, then you're just fucking yourself even more, because the point is to stick out and trade the same way in this particular trading period. So now that I know, and I'm not just making these numbers up, this is the win rate that we usually have. We have about a 40% win rate and a risk to reward ratio of an average of 1:3. Now, how do we apply now price action to give us this? So now the trading system that I'm using is a high of week reversal setup. So a high of week reversal setup means that we are waiting for price to come back to the high of the week, maybe on a Tuesday, on a Wednesday, or even on a Monday, on any particular day. And what we want to see is specific price action that tells us now it's time to reverse. So first things first, we start with the failed breakout. So this is what a failed breakout looks like. So if you look at a candle, just a simple candle like that, we have the high and then we have the low. So this can be any candle in any time frame. So what we will do is we will just imagine this candle as a daily candle. And what we shall do, we shall label it Monday. So we know that Monday now is this candle. What Monday does, it gives us a range, which is the high and the low. Once you have the range, you don't have a lot of information, but you have a reference point. Now, the next candle on Tuesday now, we have to wait for Tuesday to close. So on Tuesday, price can open there, price can open there and break out and close above Monday's high. So it has expanded our high of the week to this level. But also, price has broken out. And this is the rule. If you see a breakout, price has a very high probability of continuing in the direction of the breakout. And if that breakout fails, so you see price breaking out and then closes back inside of the range, then we can call that a liquidity sweep. And that means that there's a very high probability the next candle is going to reverse. So this is exactly what I am looking for in the market. Monday setting the high, Tuesday giving us a failed breakout, Wednesday selling. Or this can be Thursday, Friday, Monday. Or it can be Wednesday, Thursday, Friday. Or Friday, Monday, Tuesday. It doesn't matter. If you just understand where the high of the week is, then it's very, very easy for you to come to the screen and trade on this trading day. Now, let's look at some examples. So last week was not a very good week, but we shall use it still because we have to see every single scenario, what could happen. All right. So if we look at CAD JPY last week, we have, let's delete everything and start on Monday. On Monday, price sets the low. So where is Monday? Here's Monday. So on Monday, price sets the low and the high. And then on Tuesday, price breaks out, closes above the range, which is a breakout, which means that there's a very high probability price will continue breaking out the next day. Price continued breaking out, gave us that new high on Wednesday. But on Thursday, price broke out, closed back inside of the range. And so we know that now on Friday, we are looking for an opportunity to sell. All right. So how do we come and look for that sell setup on this particular trading day, now on Thursday? So we follow a simple process, which is step one, come to the screen at the right time because we are timing the market. So timing window for Asia is between 9 and 11 p.m. New York time. And then for London, time is between 3 and 5 a.m. New York time. And then for New York, time is between 9 and 11 a.m. New York time. So in this case, we came to the screen in the New York session. Now, once you come to the screen in your timing window, so timing window is supposed to be 9. Yes, what you want to identify is the high of the week. Where is the high of the week? And in our case, price in the first hour of the New York session had broken out explosively and had extended the high of the week. So now that means that this is the new high of the week. Now that we have the new high of the week there, what do we want to see price do? So we want to see price clearing liquidity at the high and then giving us a level or a reversal pattern before breaking down and going down further. So if we go to the 5-minute, we'll see that price, that is 9 a.m. Price has already cleared liquidity because this was the high of the week. Then the first 5 minutes of the first hour in our timing window, price broke out and triggered liquidity. All right. So next step, we want to see a level forming. And this is what I was seeing. This is a level because we have one touch, two touches. This is the third touch that is continuing here. So price is consolidating. And if you see price consolidating, then you understand that price does three things. It can either break out of the high and continue going higher, or it can break out to the downside and start reversing. It's as simple as that. And so what we want to see is just price breaking out and breaking out in the direction that we have predicted from the failed breakout. So this candle here at 9:35, that was our breakout candle. So that was our entry. We had our stops above that high and we were targeting a 1 to 5. So that is how we get in. And this trade was a loser, by the way. So I just want to let you know that 50% of the time you'll be right, 50% of the time you'll be wrong. Now, let's look at another example using the same principle. This is DJ30 last week but one. So we have Monday setting that low and that high. So this is the high, this is the low. Then Tuesday breaks out, closes back inside of the range, which is a sell signal for the next day. So now we have our new high of the week there. Now, when we come to the screen in our timing window, we see that we have not really triggered the high of the week yet. So we go to the 5-minute. That is where we like to look for our entries. And then we wait for price to come back first to the high of the week. So what happens? Price clears liquidity at the high of the week. So now we identify our levels and we can see this is an area where price has been bouncing off of it and continuing going high. So this is a support here. And so once price breaks below our support, that is when now we get in. So what happens? Price breaks out. That is our entry. Stop loss above that high, which is about a 50 pip stop loss. And then we are targeting the low of the day. And just 1:5, like that. So usually that is our target. And then we let price do its thing. So you'll notice that price, when it's going in your direction, it's going to give you big trades. And you will also have situations where price will not go in your direction. So you can't complain and you're getting big trades like this. All right, so now we understand the risk to reward ratio and we understand the strategy that I am going to use. The next step is understanding risk management. So here's the thing. When you are in a drawdown or when you are experiencing those losses in a row, it is natural for us as human beings to feel that fear. But if you let that fear hold you back, then obviously you're not going to recover. Because here's the thing. If you are losing -1, and then you decide, okay, I am losing too much, I am going to go back to 0.5. That means that the time that you are going to win, you're not really going to cover your losses. So you either have to accept the fact that you will either blow your account or you are going to recover. And if you recover, remember, if you get a 1:4, one trade, a 1:4, and you have 3 losers, then you are back in profit. So this is the strategy that I am using with my risk management. I am not risking more than 1% per trade. Now, this means that also there is no adding in more than 1% because I want the risk to be uniform. I want the risk to be as uniform as possible so that I can calculate how much I am losing and how much I am gaining consistently. So the best way for you to become confident in your trading and not to pressure your account is have multiple accounts. So right now I have around three accounts, but I will not be trading them simultaneously. So what I will do is I will maintain my risk to reward ratio, and I will trade like that across all accounts. I will pass some, maybe I will fail some, and that's part of the game. Now, the last thing is accountability. So how do you keep yourself accountable? So there are many ways you can join a community, and so there are many ways you can join a community, you can journal, and if you have an audience, then the audience can keep you accountable. So that is what I'm doing. So I have students who I teach this specific strategy, and one thing that I do appreciate them is the fact that I have to be on my A game every single day, because I am the leader. If you cannot lead your people with 100% everything, putting everything to achieve the goal, then it's not really worth it. So I am committed 100% because I have a responsibility to my students to show them that if you learn the strategy, if you understand the numbers behind it, and you just give time to work, then obviously you will get the result. And if you'd like to join our classes, our community, our mentorship program, I will put a link in the description. You can join us, you can reach out, and we shall see if we can help you. And if you have not joined our community yet on school, and if you have not joined our school community yet, there is so much value there. Check out also, the link will be in the description. And if you got value from today's video, subscribe, and I will see you guys in 2025 with $1 million in funding. Anyway, bye-bye.